Could the Federal Reserve raise interest rates to heights unseen in decades? Brace yourself for the perfect storm of stagflation. Economic uncertainty means you have to keep up with what's happening. Make sure you subscribe and we'll keep you in the know. In today's video, we are diving headfirst into a financial storm that could reshape the economic landscape. Stagflation, a rare economic phenomenon that is looming on the horizon. And it might just be the perfect storm that retirement savers don't see coming. Since March 2022, the Federal Reserve has raised interest rates 11 times. That's the fastest pace of increases in the last 4 decades. Yet despite all of that tightening, unemployment remains near 50-year lows. Consumer spending has stayed solid throughout 2023, and we learned last week that the third and final estimate for annualized GDP growth in the second quarter landed at 2.1%. On paper, that all sounds pretty rosy, right? Eric Lund, economist at the Conference Board, paints a slightly different picture. Lund says U.S. economic growth will buckle under mounting headwinds early next year. Explaining his forecast, Lund stated, "This outlook is associated with numerous factors, including elevated inflation, high interest rates, dissipating health crisis savings, mounting consumer debt, lower government spending, and the resumption of mandatory student loan repayments." But here's the kicker. Despite all the rate hikes, inflation continues to stay near 4.3%, which is double the Fed's target. This raises a big question. Will the central banks need to crank up the interest rate dial even further? According to JP Morgan's CEO, Jamie Dimon, this could lead to a painful outcome for the economy, one characterized by stagflation. In a recent interview, Dimon suggested that the Federal Reserve may have to raise interest rates to a level Americans haven't seen in more than 30 years. Just how high is that? Jamie Dimon puts it this way: "I am not sure if the world is prepared for 7%. 7% interest rates, and that's not all," he said. "I ask people in business, are you prepared for something like 7%? The worst case is 7% with stagflation. If they are going to have lower volumes and higher rates, there will be stress in the system." The mere idea of stagflation creeping into the U.S. economy raises concerns about retirement savings. So what can we do to weather the storm? As it turns out, the World Gold Council has some ideas. Last year, in a review of business cycles going back to 1973, the Council noted that stagflation is the one that is most supportive for gold. Council researchers added that, should stagflation become widespread, it could provide further support for gold as a diversifier and risk hedge. Rebecca Patterson is the chief investment strategist at Bridgewater Associates, the world's largest hedge fund. Patterson says in the research her team did going back a full century, they discovered gold was one of the strongest assets during historical periods of stagflation. So as we stare down the barrel of possible 7% interest rates and the threat of stagflation, it's more important than ever to be informed and prepared, because if the financial storm does hit, It will shift the economic landscape for years to come. If you want help navigating these uncertain economic waters, join us in our exclusive one-on-one educational web conference at AugustaPreciousMetals.com/webconference, or click on the link in the description.